Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'll be presenting. I'm a Senior Account Manager with AvaTrade. As we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. If anyone has any issues as we go along, feel free, just type in the chat box if anything goes wrong from a technical standpoint with the feed. As we get going, keep in mind, as always, all investments have risk. Trading FX, CFDs, spread betting, options is the same. There certainly is risk involved. No one trade is guaranteed to profit. One thing you always typically want to try and do is manage your risk in a way that makes sense to you and not just kind of jump in without thinking things through. You can use stop losses, you can use hedge trading, which we talk about from time to time in the sessions. And there's a unique feature if you're using the AvaGo mobile app called Ava Protect, which also helps protect against losses for defined periods of time for a small premium cost. So that's something you can check out on the AvaGo app as well. And we might take a quick look at that as we get going. Keep in mind what we cover is coming from an educational perspective and not meant to be financial advisement. Now, as we talk about fundamental news, there are two main types of fundamental news that we look at. And really, we've got regular economic events that are scheduled, that we know when they're coming, like earnings reports. It is earnings season now, so this week we'll have Amazon and Google and some other big companies reporting their quarterly earnings numbers for earnings per share and revenue. And there's a lot of excitement about some of these companies and what they might report, especially some of these tech companies that have done actually quite well through the pandemic because of the type of product they offer being in higher demand during a pandemic as people were stuck at home. So we'll take a look at what's going on with some of these stocks right now as we look at the charts and see some potential opportunities that have arisen already today and still yet to go today. So a lot going on the charts, and this is affecting not just those individual stocks, but the major indices. And a little bit of news about oil. We'll take a look at what's happening with that, and some stuff we looked at with oil from Friday of last week has kind of come to fruition a little bit in the downward movement below the resistance level we've been checking out. So that's something we'll take a look at as well. Now, the other type of extraordinary, or the other type of fundamental news, is the extraordinary fundamental news rather than the regular economic events like the earnings numbers and jobs numbers and things like this that we know exactly what they'll be about and when they'll be. The extraordinary economic events are things more like articles popping up like did today about China increasing their amphibious units militarily as a response to the US. And so, stories like that can create fear even in the short term, not so much today, but it's just an example of things that can creep up with extraordinary news. And we always want to try and prepare for that type of fundamental news as well. The type of news you don't know what it'll be or when it will be, but by strategically placing trip lines in the market, maybe with pending orders, buy stops, sell stops, etc., you can be prepared for the unexpected. So as we go along, feel free to ask questions and give ideas so that this is not just a lecture. This should be a conversation back and forth with questions and input from both sides, okay? Now, as we look at the fundamental news, and I promised I would show you the AvaGo app. So it's here, AvaTrade Go, under trading platforms, AvaTrade Go. You find it in your app store, and you'll find the protection feature I was mentioning on all of the FX pairings, gold, silver. And so you pick the length of time you want the coverage. It has a flat fee when you open the trade that's taken immediately as a fee for the coverage. And then any loss during the covered time period is added back completely. So it's a very unique feature for a small fee to have. If you expect a lot of movement and high volatility, to have a really high potential profit with knowing exactly what your risk is for that defined time period. So it's something that can be quite useful. And this app also calculates your margin requirement as you set up your trade size. It calculates your potential profit, your risk to your take profit and stop loss marks if you program those. So it's actually a very nice, useful tool beyond just that protection feature to use the AvaTrade Go app. And you'll find these features now on our web trader as well. If you look at the trading platforms, we have our own web trader when you log in from AvaTrade's website, that it'll take you to an AvaTrade built platform. And if you don't have that activated on your account, you can ask for it. It's available now in most regions around the world that we work with. So the web trader also has some of those useful features, the protection feature, the trade calculator, the margin calculator, all of that built into our web trader as well. So you might check that out. Now, to get to the news at hand, S&P 500 rises on optimism over COVID-19 vaccine and stimulus. Wow, that sounds like a replay of Friday. For those of you that joined Friday's webinar, it was the same thing. Optimism about stimulus, optimism about the COVID-19 vaccine, and there's been more good news today about trials with the vaccines. And so as we look, we say this one looks good. Potential coronavirus vaccine shows promise in second early trial. So this is now the second trial that looks good with the vaccine being created by Pfizer. And so we look and we see another headline, first human trial of Oxford COVID-19 vaccine shows promise. So multiple vaccines now going through human trials, first phase, second phase, etc., and pretty much all of them showing good promise. And so this is what they're talking about with this headline. S&P 500 rises on optimism over COVID-19 vaccine. It's pretty simple. And so then we look at some other ideas. U.S. Supreme Court declines to fast track Trump finances dispute. And you might think, well, what's the big deal about that? The markets don't like the idea of bad news for Trump because the markets, and specifically the U.S. markets, like the idea of Trump as president. He's lowered taxes, he's cut regulations, and so this has been something that the markets are watching, the likelihood of Trump being reelected or not. And this headline says the Democrats aren't going to get their hands on Trump's tax record and financial records anytime soon. And so the markets like that because they don't know exactly why Donald Trump doesn't want to show his tax returns. But whatever the case may be, not having them exposed is viewed maybe as good news for Trump's reelection. And so that's a headline that is kind of slipping by today, but somewhat of a positive for the markets as well. Then we look at U.S. Congress girds for a fight over new coronavirus aid bill. They're talking up to $2 trillion, maybe even more in stimulus. Again, another one in the trillions. And so they're going to argue and bicker for the next week over it. But I think the markets are reading into the fact that both sides politically in the U.S. need to pass a stimulus package again. It's too dangerous not to politically. And so it's viewed more likely than not that after all the bickering and arguing, the Democrats and the Republicans in the U.S. will pass another multi-trillion-dollar stimulus package, which again, the markets are happy about that today. Then we look, what about the EU? Not to be outdone. Also, talking about a recovery deal and also squabbling over the details, but it's expected a recovery deal for the European Union as well. So we're talking about multiple reasons around the globe, vaccine trials in different countries and different regions, and stimulus packages in different countries and different regions. And as that goes, so goes the market, it seems. Even with the outbreaks getting worse in different areas with this virus, I think that was the expectation as the economies were opening up. The markets were prepared for the fact that there would be some larger outbreaks with this virus as the economies got going again. So all in all, seems to be a positive news day. Now, as we go to, I'll pull up my demo account and let's take a look at the live movements, and maybe we'll find some moves you all are interested in maybe trading on. Here's NASDAQ surging up again today, driven largely by Tesla, Amazon, some of these high-tech stocks that are just so bullish. And again, if we look at support and resistance levels on the NASDAQ, we see a major resistance level broken right there. Resistance, resistance, and then we look at the 4-hour candles, the 12 hours today, just straight up, okay? Huge, huge climb. We can go to 1-hour candles. It seems there's no slowing this climb. And so if you feel like, hey, I want to ride NASDAQ higher, I don't see a major resistance level until you get to the all-time high up here. Okay, that was just earlier this month. We're talking a week back. The NASDAQ was up above 11,000. And so now being at 10,008 and change, you could say there's a potential to climb up to the next resistance level. And here's the support level. We just drew the old resistance level here. So your stop loss could be, if you wanted to get in on this, you have a couple options, right? If you're bullish on NASDAQ, you could put a pending, what kind of pending order would buy from this support level here? We call this a support level here because that's the broken resistance from earlier today. This was the resistance level just a few hours back. It broke that resistance. If it pulls back down to that broken resistance, that should act as support now, according to support and resistance theory. So yeah, Ebert, you're right, buy limit. So those of you that like to pick and choose your spots, if you're bullish on NASDAQ, but you want to get in at a better location, a buy limit pending order from somewhere down here around 10,780 might make sense. All right. For those of you that are a little more aggressive and you say, listen, even if I buy now, my stop loss below this support is a third or a quarter of the risk of my potential profit to this ceiling. So some of you might say, oh, well, I'll just buy now. I'm okay with that, right? If you don't mind that risk going down and you say, I'm okay with that, then fine, you do your market move. In which case you would just say, all right, let me buy whatever trade size makes sense for your balance and for your risk tolerance and for the distance to your stop loss. And then you put your stop loss below the support, say 10,748 would get below that support. Modify, stop loss, 10,748. Okay, here's my stop loss, this red dotted line that gets me below the broken support from earlier today. Maybe I say, I want to cheat it down a little bit just to be on the safe side in case it tests that support again. I get it below these wicks. And then I say, okay, now my take profit should be somewhere before this resistance up here, maybe, technically speaking. So right around 11,000, 11,020. So I come here, I say modify. And you might ask, why do you go back and put your stop loss and your take profit? Why not put it right from the beginning? And my answer is I was in a hurry. You can put it from the beginning, then open the trade. If you're in a hurry and you want that spot now, you open the trade, go back, then add your stop loss and your take profit, whatever makes sense for you, okay? So that's just an idea that there's two different ways to play this. A market move or waiting for it to come back down. If you feel you want a better entry point, then get in. And there's no reason why you can't do both, right? Couldn't I do half my trade size from up here? And if it comes back down, have a pending buy limit in case it comes back down to 10,760, and then I buy in from a better point for the other half of my trade. Okay, so that idea would be a 1-2 setup where I say I'm accepting the fact that it's not the perfect entry point. So I take only half the trade size I would normally take maybe, and then I do a buy limit from 10,000, let's say 780 or 785. And my stop loss is going to be maybe at the same spot as the other one, 10,750 40. Okay, now I have a pending order that if it comes back down, I get a better entry point for half of my move, and both of the stop losses are at about the exact same spot. Okay, and I could slide it just a little to make sure they're in the exact same spot there. Now they're on the same level, and my take profit I could program at the same spot as well. Okay, so you have a little flexibility with your strategies. You don't have to go all in one from one spot. Okay, now certainly, if you believe the opposite, I'm showing an idea of buying here because of the fundamental news we looked at, right? That's the whole point of this webinar. Using the fundamental news to kind of pick the direction you might prefer. It doesn't mean you don't have to, that you have to buy on this. You certainly could sell if you think that it's gotten overbought from all the momentum. If you think the momentum died and you want to sell, by all means, you can sell on this as well. Okay, so let's take a look at gold real quick. I just got a request, so let's throw it up. Georgios asked for gold, so we'll have a look. I like what I see here on gold with the potential ceiling that it already hit up here. You see this wick just from earlier today. Gold was up here. Look at that. It hit a peak, pulled back down some. I believe I see a support level in this area here. Okay, you see this was resistance. We're looking at 1 hour candles. Resistance, resistance, resistance. And then it broke through the resistance here. And now it's pulling back towards that resistance here around 1814 or so. So it's downtrending right now. Looks like it's dropping a bit. I think it'll likely find some support here soon. And you could take a shot at it pulling back towards the day's high. And again, we're looking at gold and we're thinking, we've been talking about this for a long time. The markets are rising and gold's going up. Why, when the NASDAQ's flying up, why did gold go flying up at the same time today? Why did it jump up to 1820? You'd say it should be the opposite, shouldn't it? When the markets are going up, shouldn't a safe haven like gold go down? And typically, traditionally, I would say yes. But ever since the pandemic, I would say not necessarily, okay? And for the most part, as the US dollar weakens, the US dollar has been somewhat of a safe haven through the pandemic. As the US dollar is weakening, those things paired against it have been rising, like gold and the indices. And they've been kind of rising together. NASDAQ's reaching all-time highs over the past months, and gold has been climbing above 1700, above 1750, above 1800, while the NASDAQ's climbing and the tech stocks are doing very well. And so it's an interesting time to be trading gold. But in general, hey, gold's climbing. It has been for months, and we're in the middle of a pandemic, so maybe it's not rocket science here. The bigger picture, I think gold investors maybe are looking at. Okay, so it's possible this support level here might make sense. You might be looking at gold and saying, hey, I can take a small shot at gold, and I can put my stop loss down not that far, maybe 1812. Maybe 1812, something like that. Why? Because it's below that little technical support level we saw. So I've got my stop loss down here on gold, risking not that much, and potential profit about double what I'm risking. To my take profit up here around 18, let's say 18, 19, 50. Take profit 18, 19, 50. Again, these simulations I'm doing, it's not me telling you should buy and sell and get out at these exact prices. It's a simulation of how to apply the fundamental news along with technical entry points while being able to limit your exposure and go after larger potential profits and having the fundamental news hopefully on your side. Okay, And so we see we've got NASDAQ up about 100 now, okay? And trying to bounce around, trying to find another high today. We'll see how that goes. Okay, so let's take a look then at maybe some other assets, like, where is it? Oh, I have it at the top, Tesla. Okay. Tesla jumped to a high today, and you see all my resistance levels up here from before. Look where it perfectly reversed from the resistance levels we drew on Friday. So it gapped up, it climbed, it hit that mark, came back down below the Friday's close, and now it's trying to climb again. Tesla looks like something that could climb, okay, back towards the ceiling up here. And so if we're looking for a take profit on Tesla and a stop loss would probably be below this support that we're looking at here. Let's say 1436.5. Okay, modifier delete. Let's say 1436.5. Okay, got my stop loss down here. It's actually right behind this support line level I drew. Let me slide this line. Okay, so there's my stop loss on Tesla. Okay, and my take profit is about twice the distance, 1740, let's say 1760. That's just before the high of the day. $17.60. Again, these are just examples of trying to ride the momentum of the day, the fundamental news, combined with proper technical entry points. It's nice to see this high and then a pullback, a support level formed that you can use for your stop loss purposes. And maybe I want to get a little bit lower than that to make sure I'm below the support level and give myself a chance at a profit if it goes back towards the high. Limited risk, about half the distance, half the risk of my potential profit without having to break the high of the day, going in the direction of the fundamental news as we know it. Yeah, Mubarak, it gapped up, it refilled, retraced the gap and filled it. Now it re-entered the gap. Good point. So it re-entered this gap. What happens when a gap gets re-entered? Many times it fills the entire gap again. So if you were going to have a take profit sooner than this one up here, it would be at the top of the gap, right? So the first resistance level is at the top of the gap right here. And so maybe you do a partial close at that spot, Mubarak. So you could manually close half the trade once it reaches the top of the gap if you see that as the first level of resistance and you want to take a quick scalp to get out. Very acute at noticing that. Okay, so let's keep looking. Let's look at some other ideas of what's happening. Crude oil, I think, is interesting. And we look at the one-day candles on crude oil. We see the resistance level from Friday that we drew. This is the resistance level from Friday. Resistance, 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 resistance. It's really tightening here. Oil is really, really tightening along this line. Buy stop up here makes sense if it breaks this resistance that's been there for weeks and really months, because this gap down has not been broken, the top of this gap now. That's a major resistance level. If it breaks, a buy stop from above that resistance level could pay off nicely. And in the short term, trading down from that resistance level requires a small risk. So when we look at 4-hour candles, here's that resistance level. That was the top of that large gap. So if you traded down on oil now, you only have to risk about 50 cents or 75 cents per barrel to get above that huge resistance level. So you could look at oil and say, sell from a technical standpoint and put your stop loss at 41.9, something like that, maybe 42 to make it even. So I might say I'm selling on oil. I'm putting my stop loss at 42. And my take profit may be down here at 40, 39.5, even 39. There's a support level down here around 39. So with that setup, I'm risking about a third of my potential profit or half of my potential profit. You see the stop loss here above the resistance. Your stop loss, it has to break this the top of this gap for you to lose on the sell. It has to break it, and that's where your buy stop could kick in. If there's enough momentum to break the top of this gap and it hits your stop loss on the sell, then a buy stop could kick in and have the potential to pay well. So you can back yourself up with a buy stop if it breaks above 42 and have your stop loss back down. And again, limited risk, limited risk. You could be wrong on both. We're not here to try and be Nostradamus and say we're going to be right on everything we pick. We just want a profit, right? In the end, we want a profit. We look down at the trades we have running now. Okay, they're all in the money. You don't expect them all to finish in the money. That's not how trading typically works, okay? But when the fundamental news is on your side, you should find that you can finish with more in the positive than negative. If you use proper entry points, price levels, and then fundamental news in your favor. Okay, so very nice potential here for a move with oil as well. It's our newest trade that we opened, so it hasn't quite gone our way yet. But if we wanted to close out all four of these, we'd be on top. If we're just scalping, we're trying to catch the wave on the fundamental news. If I just close all of these, 1, 2, 3, I just made 150, 200 profit, right? Now I can be risk-free on oil. If it hits my stop loss, that's about all I'll lose. I rode the momentum. Now, why might I be bearish on oil other than that resistance level? Technically speaking, but this is a fundamental news webinar. So why might I be bearish on oil? Let's look for a fundamental reason. And let's see, I had an article. I believe it was on investing.com. Let's look. Oil rebounds on COVID vaccine hopes. Okay, that was positive for oil as well because it's positive for the economies. But I also saw there's an article about the OPEC plus nations tampering down their production cuts. Here. We'll see if we can find it. And it's possible I saw it on. I won't waste too much time doing this. We'll see if we can find that article. I might have saw it on Reuters. And we'll look at commodities. No, the article's not popping up right now. But trust me, there was an article I saw today about the OPEC nations kind of agreeing that enough's enough with the production cuts right now. So that can help oil drop back down some, okay? And so, yeah, I think, Stefano, I think you're right. It was on investing.com, but it's since scrolled off their most recent news articles, which is okay. That happens. But the point is the same. There's some mixed news on oil. And so when we start seeing mixed fundamental news, and it's hard to pick a direction, one article saying, hey, production cuts, maybe they're going to stop doing those so much. That means maybe oil supply could more easily go up, which would drive price down. But then we see an article that says, you know, oil market bullied or boosted by vaccine hopes. So that's why when we look at the chart, we say, well, it makes sense to take a market sell because we're below the resistance level and we only have a small risk to get through the resistance. So it makes sense to take a sell underneath the resistance and at the same time, prepare a buy stop in case it breaks through. Where would my buy stop be activated? A buy stop buys from a higher point. If it hits 42, I think it broke the resistance. So then I'm in on my buy. And my stop loss only has to be back down to what, 40.5 maybe, to be back below that broken resistance, which should be support if it gets broke. And my take profit could be up at the first resistance level, which is around 48. Okay, so now I've got a buy stop prepared to back up my sell. If I'm wrong on my sell, it breaks through the resistance. Now I've got my buy prepared for $6 per barrel potential profit, risking only $1.50 per barrel or $2 per barrel. 2 to 3 times the potential profit of the risk. So I could be wrong on the sell, kick in on the buy, and have overall profit. I could be wrong on the sell. It could go up, trigger the buy, come back down, be wrong again. And then the one time it breaks through, when I replace another buy stop and it actually runs up to the next resistance level, I could be right 1 out of 3 times in profit, 1 out of 4 times in profit, when I'm only risking $1.50 to make 8. Okay, so per barrel, I mean. So this is the type of technical setup along a major support and resistance level right here that is backed by huge fundamental reasons why this gap occurred and what it would take to break the top of that gap. Huge fundamental control over these movements. And once they occur, you can see the same size candle that it took to break down and create this gap. Look how big that one-day candle was. If this breaks through, you could see a replication of that candle size in the opposite direction. Many times that's what you see with this sort of setup. Not every time, but many times. Okay, so any questions at this point? Yeah, certainly we can look at Boeing. Let's look. Probably Boeing would react positive to these developments on a vaccine, right? Most all the airline stocks are probably going to react positive to potential vaccines. Disney is probably going to gain momentum from that as well. Let's look at Boeing. And then maybe we'll call it quits this evening after this and one more asset. So as we look at Boeing, 1 hour candles, we've got the market opening back a little bit. Let's look. There's the 20th. There's the 17th. So market opened and went down a bit. It hit a support level down here. Okay, this was the bottom of this gap. You see this gap, this old gap over here? That's a natural support level at the bottom of the gap. And then you see that natural support level last week verified itself as support and went up. And now it gaps down right to that support level again and seems to be bouncing. So Boeing, if you're going to buy on Boeing, you've got a nice support level here that you could put your stop loss below the bottom of this gap, let's say around 169. So if we're looking at Boeing climbing, modify stop loss 160, let's say 8.5 to be below that gap. And the potential profit, if it goes back up to the beginning of this gap from last week, would be around 184. Wow, what a nice setup. Let's look at how this plays out. We do a market move. We're risking half the risk to get below this support level, the bottom of this gap, half the risk compared to potential profit if it goes back up to the bottom of this gap. So we're playing the fundamentals here, the fundamental game that we're going to risk half of what our potential profit is. We're going with potentially the fundamental news in our favor to try and go after a climbing market up to the bottom of this old gap down here. Okay. Aruna, it is possible for a significant pullback on the markets. So you've got to be prepared with How much are you exposing on a move on Boeing to go up, right? If you're buying on Boeing now, you've got to think, what if there's a large pullback? And you probably don't want to leave the exposure side at a level that's greater than what you're comfortable with, because there are two different ways to trade with what you know now, and also what might happen with the unknown, that other type of fundamental news. Okay, let's take a look then at one more asset, and maybe we'll look at Tesla again. Okay, Tesla's still climbing. It's headed towards the top of this gap that one of you all pointed out already. So again, markets are just doing what the fundamentals say they should right now. Okay, what do you think's happening with something like copper? This is an interesting asset to trade on. If we're looking at copper, okay, what happens when industry is doing well and expanding? What happens to copper prices typically? Yeah, copper tends to climb, right? With positive economic news. And look at this spike today. And the reason I wanted to show you copper is because I think the entry point looks nice if you're bullish on the markets. So you've got copper spiking to a high and then a little bit of a pullback. And look where the pullback stopped, right at this old resistance level. So resistance, 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 resistance all the way across, breakthrough candle, and then it pulls back right to the old resistance, which could act as support right now. So if you're looking at this as a support level now, this was your breakthrough candle. This is the pullback. Now it's right on that breakthrough. So copper could be in a spot that you'd say, okay, I would buy on copper, put my stop loss with a small risk, 2.905. Stop loss 2.905. Okay, take profit back up near the day's high somewhere before it. 2.938 maybe. And then it wouldn't even have to break today's high to hit your take profit. Okay, so I'm risking on this move about half of my potential profit. Now, some of these trades you see have some spreads on them. So I'm starting in the negative. Takes a little while to get into the positive. So in a short period of time on the trades we've been playing around with, we're not only finishing in the positive, we've overcome the spreads and then went into the positive in a pretty short period of time, just trying to ride the momentum. And right now I could probably lose on all three of these and at worst break even in this short little session we've been playing around with. And the longer you let it go, look how much we'd be up on Tesla now, right? And we drew those spots at the top of the gap at the high for the day. And it looks like by now Tesla's about reached the top of that gap, okay? So it's not hard to use the fundamental news, the momentum as you know it now, to jump in the market, go after these hot assets, these hot stocks, these commodities, and these indices that are moving with all of this momentum. Ride the momentum while limiting your risk and have pending orders in case it goes the other way. To say, hey, I'm not always going to be right. It breaks the support level and reverses, I'm selling. It breaks the resistance level on my sells, I'm buying and getting out. Don't be afraid to change your mind, right? With those stop losses potentially and getting in with pending orders. That's how you trade on what's known and prepare for the unknown, okay? Okay, let's take a look quick at platinum. Someone's asking about platinum for a while. Let's have a look. Okay, platinum's been moving like gold, right? Somewhat of a safe haven type asset. It looks like platinum's got a pretty high ceiling that you can look at today. But it also looks like it's starting to lose direction. And what I mean is on platinum, I see a tightening of this movement. The low points are higher and the high points are lower, and it looks like it's getting boxed in. Right now, I'm not a big fan of that entry point on platinum. You could trade on it if you want. If I was trading on it, I might have pending orders up here as a buy stop and down here as a sell stop to get in on a breakout move if it breaks above the resistance or below this support. Okay, pending orders, sell stop down here, buy stop up here. But in general, I'm not a big fan of that entry point right now. Quick look at Amazon as a request, last request, and then let's call it a day. Let me do the hashtag A trick. Well, we got close. We got Apple. Let's find Amazon. There it is. Okay. Amazon, same as Tesla. We said it at the start of the webinar. Tesla, Amazon, the typical tech stocks are really showing a lot of momentum. And the question is, where's the next resistance level? I see this as significant right here. Okay, you see the bottom of this gap right here? That's a significant price level. I think you could see Amazon climb, clear up to this resistance level even today. No guarantee, right? But I wouldn't bank on Amazon having a huge pullback just because it's climbed so much already today. The possibility is there for it to test this resistance level here, which is the bottom of this gap. Okay, I think this is a significant price level for Amazon to try to reach. Okay. All right, everybody. Thank you for joining. We've been going for over 40 minutes here, so I think that's enough time. I could take another quick scalp. There's Boeing up about 50. Already overcame that gap. I could minimize my risk and say, okay, let me get out on the copper because I profited so much on the one. And now here I am still on my crude oil thinking maybe it'll push down. Now I'm up another 50 or so on the others that we closed. And now I really have no risk letting my oil run, right? So this is the type of thing where as you diversify and you go with the momentum, you should be able to take some scalp moves, hopefully, and pocket some profits. And then those that didn't go your way right away, be able to ride them out with, if you look at the moves all as one move, as a basket of moves. Now I'm going kind of risk-free on oil because all the way to my stop loss on my oil, by the way, which would be my in point on a buy stop on oil, is less risk than what I just made on riding the waves here the last 20, 30 minutes. Okay, so with that said, good luck with your trading through the rest of the evening and week. There's a lot of energy coming this week with the earnings numbers coming out. All of the earnings reports, by the way, that are of assets on our platform are found on our website. If you go to trading info, earnings releases, you know which assets have their earnings numbers and the approximate date. Sometimes the dates change. You have to maybe do a quick Google search or check on investing.com or NASDAQ.com, and you can find any updated dates for earnings releases. But these are pretty much updated as well in as real time as we can. But companies sometimes change the release date last minute. It happens. But you get a general idea of how many big companies have important numbers coming out. We've got, Alphabet, which is Google. We've got Amazon. A lot of big companies through the week this week with numbers coming out. So these major assets and indices and stocks could see a lot more movements and breakthroughs and reversals. Okay, so stay on it. I'm confident you all can profit well. Just manage your risk with what makes sense for your account and your tolerance, and go after those profits. All right, everybody. Thank you for joining. Bye for now.